All right, traders, good afternoon. This is Christian from Tribeca Trade Group, and this is your end of day market recap for Thursday, June 9th. All right, so let's get to it. I've been out for a couple of days, so back at it today with end of day video. And well, we've been going back and forth within this range. I think that's the main thing. And one of the things that we talked about over the last couple of days, or in terms of before I left, was that if this range breaks, we could potentially see a big move. And so let me get into that. Before I do, risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything we're talking about is for education purposes only. But yes, this was something that we had sent out, and kind of we're talking about the last few days in terms of this is basically how you use the value areas in volume at price when you have a very tight range. So this is what I sent to members yesterday, and for a trade idea on before the break kind of revealed itself. And basically how I talked about this in the pre-market session was, so the idea that I put together here was an SPX strangle, which can be expensive, right? But we know that we had a catalyst, which is funny how this happens, right? The catalyst is tomorrow, the CPI report, but sometimes the market doesn't wait for that, right? The market decides to go one particular way, and you kind of go from there. But yes, I detailed, tomorrow's expiration, 40, 50, 40, 25 put spread for 370, and then also buying a call spread. Now, it doesn't necessarily, because this is something that I sent out yesterday, and I didn't put the trade on until this morning. So you kind of have to change around the strikes. You have to put together, if you like the trade idea, you have to kind of customize it to what you're comfortable with, right? For me, this was a $25 wide put spread and call spread, which is pricey, because you have to buy both of these, which I don't normally do a structure like that unless we've got a catalyst. So, this would have cost $750. The way that I structured it was I actually did, because we opened up, I think, a little bit lower. So I did a 40-40, 40-40, 40-20 put spread. And I had to pay a little bit more for that. So that was $20 wide for 450. I actually added to a little bit. I was able to actually get that a little bit cheaper after the open, less than $4. So that worked pretty well, as it was kind of legging into that a little bit. But and I only did one side of that because, as I discussed in the pre-market session, I have more of a long portfolio. So I don't need, if the market were to break out of the range, right, my longs would hypothetically do okay, and I would only lose the money on the put spread. So again, it depends on, when you structure some of these trades, it depends on how you're positioned. I mentioned that if I was neutral, if I didn't have any swing trades on, then I would have done both. But that's the way that I decided to do it. So again, you can kind of read through what I sent here, but I know that sometimes traders like to put different indicators on. They like to look at where, the strikes are positioned and the possible gamma move. For me, all I need to know is basically where there's support, where there's resistance, and whether or not we've got a catalyst coming. I really try to, and I know this is a little bit more of a complicated indicator, but that's all that I really need to, that's the chief thing. And I always say price and trend are number one. Of course, I like to know when there's a catalyst in the market. Today was ECB, tomorrow's CPI, and then we definitely have catalysts next week too. We've got the Fed meeting on Wednesday, right? And then we've also have option expiration. But if you look at how this is set up, right? So one of the things that we talked about and why this was pretty important was how slim this value area was for this week. Remember, kind of state this in these videos all the time, but look at the width of this value area. Again, this is based on the price and volume of the previous week. right? So the slimmer these value areas are, right, the more the potential, the bigger the potential move, right? It's kind of like what and I mentioned this in the trading room earlier today to members, is that it's very similar to coiling, right? When a few moving averages are wrapped around one another, right? And you certainly got that on the 1 hour chart. Right. So I think, when you have clues like that, you don't need, in my opinion, you don't need to know what the gamma move or, what all of that is going to foot in. Just simply price and trend. Right. And knowing where there's significant resistance and support. Right. And that's the same thing with a whole bunch of other things too, right? A whole bunch of other indicators that people like to use, right? But that's it, because it's going to tell you, right? And the reason why I like looking at this overall versus just what the options are going to tell me in gamma, I like to look at what the overall market, right? And you're going to see that in price and trend, right? In terms of volume at price, right? So I thought that this was pretty good. So what's next? So this trade really worked. And by the way, I always like to give this is my trade blotter for the day. This was one trade that worked. Right. I also put on an upstart short that worked as well. But I had a few things that didn't work today. Right. I came in today having some positions on because long positions have worked really well. We've talked about how that there's been a breadth expansion. One of the things that I said earlier today is when we kind of came into today was that this breadth is nasty. When we started the day, and that's a change of tone. We haven't had that. So for instance, let's go back to the daily chart and then we'll talk about where we could be headed here. But this is the first time that we've seen, so you could see this on the bottom of the screen. This is the first time that we've seen breadth over the last, since we made this bottom here, really have any type of heavy selling pressure, right? And when I usually am looking to buy the dip, and I made a couple of mistakes today, and I'll show you them. I tried to trade AMD because I knew that it was today's investor day, and I had to back out of that. It was just a day trade, didn't work. But I should know better, because when you open up the day and you've got breadth like that, you know that there's big selling pressure, right? And that's something that I try to communicate whenever I see that. Now it's different. When we open up down 1% and the breadth is kind of flat or even positive, right? Then it's a little bit different, and it's a little bit more of a buy the dip opportunity. But when you open up like this, and so you could see how this developed over the day. Let me bring up the 5-minute chart, but this is where we opened, right? That's heavy. And that's really not meant to be. So even though we really didn't break down till about 1 o'clock, 2 o'clock, the breadth was never really telling you that that there was anything to kind of go after, to the long side, other than if you're kind of, scaling into some positions and doing that type of thing, because I did that a little bit today too. But it really kind of picked up at the end of the day when we broke. And I was just kind of saying, because we kept on kind of getting back to the lows of the session for the day a couple times today, right? So, here, and then once we finally broke it, right, it really kind of came undone there a bit. All right, so let's talk about where we could get. So now let's, the next thing to do is, so this was nice. And what I did with this trade, right, is, I took targets along the way. At the end of the day, I took this trade off, and I was also trading some short SPX via this SPXS. By the way, this is, in my opinion, again, I try to give these little hints, the leveraged inverse ETFs, right? If you don't have a name that you're looking to, kind of short, right, and we break the range, the easiest thing is to put on, I use SQQ quite a lot, SQQQ, which is triple leveraged, triple inverse leveraged Qs. And then I like to do the one for the SPX or SPY, and that's either STS, right, Sam Dog Sam, or SPX, as this one is right here. So why? Well, because it's easy. and if the market really moves quickly, right, you don't have to get fancy with trying to figure out like, oh, this name and this, oh, I'm going to short this area of the market. When you break a range, right, it doesn't really matter how much, and when the breadth is that negative, it doesn't, let me break it to you, it doesn't matter that much what you pick to short. And if these leveraged ETFs, they'll move quickly if the market starts to move like that. Right. For me, it's a little bit easier than trading, puts, SPX puts or something like that, because you don't have to worry about the volatility. Now, on a day like this, it probably worked pretty well. We did get up to a 26 in the VIX, still not that high, right? But it seems like, we're kind of using the way that this VIX has worked recently. Let's go to the daily chart. It's a bit counterintuitive. When we've been getting to this bottom of like the 20s, lower 20s, we've had this spike up in volatility. Usually, and why it's kind of counterintuitive is usually when you see the VIX come down, it's telling you that the market is no longer, is not pricing in a big volatility move. But the way that the market has been in 2022 is that it's almost been like a danger area. When this VIX gets to the lower 20s, volatility starts to actually creep back in a little bit. So it's been a range type market with trading with using the VIX like that. Again, very different than how we normally use, or how I normally use the VIX. All right, so again, we moved up, and of course that, there's several ways to make money when this particular happens, when you do break the range. But one last, before we kind of talk about where we could be getting to, one of the things too that I don't view this as really, I know like bears really get excited when this happens, and I think it's actually like, it's not a bad thing. Even I play more things to the long side than anything else, even though I'm respecting that. What we saw the last week or so was probably a bear market rally, right? Like we saw back in here, but I don't think it would be the worst thing in the world if we come in here and we retest, because it would shake out, right? There's been some bullish sentiment that's come back into the market. If we come back in here, right, and it'll be interesting once we get to this 38.94, if we get down there, and to see if we actually kind of hold those lows, and maybe we have a double bottom. The other thing is too, and I've been, I talked about this in the midday session today, but I think I talked about it once, I think in the macro weekend video, that, it becomes a challenge once we rally and we've got this overhead resistance of the 50-day moving average. And then of course the 200 up here. If we come down here a bit, right, or kind of allow these moving averages to kind of catch up a little bit with the price action, and it might actually make them a bit easier to get back above with due time, right? And of course, another point that I made today was that this was a great post, I thought, by the Stock Traders Almanac, that we have a seasonality factor going on here too, right? That and I didn't actually see that he put low retest in June, so he's kind of thinking the same thing. Fading rally at resistance. June is the worst month of midterm years. So you kind of have to let it play out a bit, right? And if you lost a little bit of money on your longs today, you just kind of have to, put this in the overall context of things where we are this year. Hopefully, if you had a hedge on like we described yesterday, and talking about a possible break of the value area and what that could lead to, that may have kind of helped a little bit. But no doubt, I mean, I have a trade on in MQ that cost me some money today, and a couple other things, right? I have some exposure on. So it is what it is. The hedges help. Playing a couple things to the short side helps as well. So 38.9, so point of control 39.82, 38.94. And really, again, the 1 hour chart gave that nice clear view of your support and resistance for the week, and how we basically just ping-ponged around that back and forth, and then finally kind of broke it decisively today. So notice where we came down to, right? So this is S1, which is an extension away from the value area. So that's 40.15, right? So we'll watch this tomorrow. And if there's a hot CPI report, maybe we can kind of continue to gravitate down here to 39.43, right? And that's the VPOC from this week down here. So that's kind of what I'm thinking, right? But I don't know, I don't know for sure. So what you do is you have some trades on, right? So here's the money that I made in this put spread. I got out of this for $11, paid $4.50, as I mentioned earlier. And I rolled this out a little bit, right? So I've got some exposure in case we do make this move, we continue in the direction of the trend, which is lower. So I've got the 39.90, 39.70, which kind of gets you right into this range down here, right? Now I did, at the end of the day, I also threw on a cheapy call spread too, just in case we do get some type of CPI that's, at this point, if it's in line or if it's not, much worse than expected, we might set up for a little bit of a bounce, right? Who knows? And sometimes you bounce and then sometimes you go lower. So that's kind of what I was thinking in terms of this. Here's what they're expecting, 0.7. And then, of course, the year number, which is the big headline number, which is people are, oh my God, are going to go like that. But they're expecting 8.3, so we'll see what they get. Now, let's say this number comes in much worse, if it does come in hot and worse than expected, right? Then I think that's why we have that trade on, for a move down to this VPOC takeout. And then we go from there. Another thing, again, so I'm being a little bit of an optimist here, right? If this number comes in much worse than expected, right? Then I think that we're setting the bar. So let's say, and I'm just making this number up. I don't have any information here, but let's say this number comes in 9% or something like that, kind of like the European data came out, right? It's just setting the bar that, okay, now we've got a really bad, the inflation has reached possibly a height, right? We are hearing about things like, some companies are doing things like AMD just had their investor day. They're saying that the PC demand isn't going to be as higher. So this becomes a self-fulfilling prophecy. Once you get that high ticket inflation, perhaps then we'll start to see economic data that's really going to come in and start missing things, right? Because this spooks people, right? And when it spooks people, people stop spending as much, right? So again, it does become a self-fulfilling prophecy, right? And we'll have to watch what yields do. There was a bond auction today that actually had TLT. This was the thing that I was worried the most about as we kind of came into today, because bond yields were right around the low here. And again, the higher these bond yields go, keep in mind, we're looking at bond prices. I always explain this because I know it confuses some people, but we're looking at bond prices. So the way a bond functions is yield is inverse to what the price is doing. So the lower this goes, that means the higher yields are going, right? So we're very close to where we were down in here for yields. Again, the reason why I'm talking about yields is because if the inflation report comes in higher, you're probably going to see yields move pretty quickly. And that means yields are going up, right? And price is going to go lower. And maybe we come in and take out this VPOC down there. All right. So that's a couple things. So again, two levels, right, that I'm watching for tomorrow or even next week with the Fed meeting, right, is possibly if we move below 40.15, 39, so 39.43, and then further to the downside would be 38.94. And really that's what I want to be kind of watching is, what price does down at there if we, now that this is broken and we're back below, the 20 and 5 period moving average. All right, it's kind of the same thing. We could look at the Qs, or you could look at NASDAQ futures, but you got the same thing going on here. Right, you got the break of the value area, and there will be a VPOC down here as well. Notice how the price just went right down to this 299.79 level, or excuse me, 300 level, which is the Venom. So interesting. And again, these aren't major support. I view them as speed bumps. All right, so we'll see if that continues, and I think that will very much hinge on what the CPI report is tomorrow, with just keeping in the back of your mind that usually this time of year for a mid-year election is a negative time of the year. But again, keep things in perspective, right? If you could let this play out, and again, I was down money today. I'm trying to be I'm always try to be as transparent as possible with what I'm dealing with. But it's just part of trading, and we obviously have a bigger bear market than we usually have, and letting it play out will kind of get you to maybe where we need to be in terms of, my thinking is get through the summertime, and then maybe we see things kind of perk up if we start to see that inflation data kind of tone down a little bit. It doesn't have to be tomorrow, could be later in the summertime, right? The lower the prices go, potentially the better the better opportunities that you may get later in the year, provided that the inflation comes in and the Fed kind of puts the brakes in terms of raising rates. But again, I'm getting ahead of myself a little bit. But the reason why, again, is just to make sure that you've got the overall view, not just one day and what's going on. All right, guys, I think that's it for today's video. Is there anything else that I wanted to cover? The price action, again, was pretty much a washout. The worst performing areas of the market, interesting, the metals and mining. And I was out yesterday, I was in an STLD order, and, just a reminder that this market just moves very, very quickly. I stopped myself out of, my stop hit on STLD, right, which had a nice little move. And then I'm not sure what happened. I'm not sure what happened with the reversal yesterday. Probably no news, but we did go lower. I stopped myself out this morning in this trade, and look at it go all the way down to 76. All right. I'll leave it there for tonight. I think that's enough. Guys, have a great night, and I'll see you tomorrow.